To counter the dominance of the world's big three credit rating agencies, players from China, Russia, as well as the United States launched a new joint rating company in 2013. It aims to represent emerging markets and offer a different rating perspective. But reputation and trust are not built overnight. Join us this week as Martina Fuchs finds out whether Universal Credit Rating Group, or UCRG, will be able to break the monopoly of the U.S.-based rating giants and better assess the creditworthiness of the world's governments and corporations to prevent future crises. Only on CCTV News, only on Biz Talk.
Credit rating agencies S&P, Moody's and Fitch were partly blamed for the 2008 global financial crisis. Accusations flew that their missed ratings even triggered the financial meltdown. Now the newly founded UCRG aims to rival the Western firms and speed up the long overdue reform process. How will it provide the necessary checks and balances, and will it be able to reshape the global ratings industry?
In June 2013, three independent credit rating agencies from China, the United States, and Russia together launched the Universal Credit Rating Group, with its headquarters in Hong Kong, a key financial center in Asia. The founding members of the group, Dagong Global Credit Rating, Egan-Jones Ratings Company, and Russ Rating, aim to create a new international rating order. The goal was to challenge the dominance of the three U.S.-based heavyweights, Standard & Poor's, Moody's, and Fitch, and represent a different voice from the Asia-Pacific region. It invited well-known former politicians on its advisory council, chaired by ex-French Prime Minister Dominique de Villepin. With its ambitious plan, the group vows to reform the current international credit rating regime and achieve a balanced development of the global rating system by the year 2020. Analysts say that while UCRG is a viable competitor and will boost competition in the ratings universe, it will need time to establish its credibility.
The dominance of the big three credit rating agencies, Standard & Poor's, Moody's and Fitch, is still absolute. How can a pan-Asian ratings agency challenge this?
Well, because all these three agencies are based in the northern countries, in the western countries, and in the US. If Asia, which has today the biggest economic capacity in the world, 35% of the world output. We have also the biggest reserves here in this region, $3,000 billion for China, 1,000 for Japan, 300 billion for Taiwan. These do represent a very strong capacity. 60% of the billionaires of the world are here in Asia. So if we take into account this new capacity of Asia, of course, having a strong credit rating agency here in Asia would be something that will help all the deciders in this region, whether they are public or private deciders. They might be interested in having a different view, another way to look at the world's economy. And I believe this diversity, this difference of experience, it might enrich the debate.
So getting more emerging markets on board of UCRG seems to be a top goal. Which countries are you hoping to attract?
Well, of course, now the main objective is trying to create a new credit rating system for Asia. It has been the goal that has set the Prime Minister of China, Prime Minister Li, because I think it's important in this very region where most of the creditors are, to have an exemplary system. And I believe this is something that really can be achieved in not too long. Dagong has got a mandate to work on that, and I believe UCRG can also play quite a role in order to create the conditions of a better credit rating system. But I believe also towards Africa, towards South America, UNISUR, the Organization of South American Countries, are working in order to create a new type of credit rating system. In the Middle East also, because Islamic finance is not part of the international world finance, so it's not as much as it could or it would. And I believe by changing the credit rating system, we might have a possibility of integrating more and more these emerging markets.
Economic growth is more and more shifting towards Asia. How, in your view, can a pan-Asian credit rating agency contribute to economic development in this region?
You see, Asia is the growth model of the future. Asia is where the growth is, and I think there are good reasons for that, which we need not go into today. But it is clear that the outlook is robust. The outlook is very, very sort of attractive for Asia. So these are the markets where people will have to invest. And if we have Asian rating agencies who are judged in line with the global standard, that is very important. The standard can never be compromised, but it can be judged by anybody against the global standard. So you have the large rating agencies here from the rest of the world. They are welcome. You cannot have a monopoly. Competition is the best way to improve the standard. So if we have a rating agency here which does Asian companies, that gives them a critical mass and a base to then show to the whole world, you want to invest in Asia? You come and look at our rating process. It is transparent. It is close to the market. We are watching it all the time, and our track record is good.
UCRG plans to come up with a new set of methodologies to rate companies and sovereign debt by 2020. So what exactly will they entail?
UCRG 的评级方法的设计理念呢，我们是完全呢不同于传统意义上的评级方法和理论。最为重要的，我认为是要发现呢客观存在的就是信用风险形成因素的内在联系，在这个基础上，我们来构建一个全新的评级思想和理论。这一点是非常重要的。但这里边我们突出的是要看一个债务人他的偿债来源的可靠性，以及偿债来源和他所负担债务之间的关系。其实评级我研究了这么多年啊，没有什么太复杂的，它一个很简单的道理，就是看你债务人你拿什么来偿还债务。你这个偿债的来源，你是高于还是低于你的债务负担？比如说像美国联邦政府的债务，它显然是偿债来源远远不能覆盖它的债务，它只能不断的呢突破债务上限去借债，甚至通过呢这个所谓的量化宽松货币政策来偿还债务。这些呢就是我们主要的一些设计理念。
UCRG was launched last year to counterbalance the dominance of the three big credit rating agencies. What is your view?
Credit opinions are the views on future credit risk. So when we analyze credit risk for an issuer, we need to look at its capability and willingness to repay the debt obligation on a timely fashion. In my view, I think the presence of diversified and different views in the marketplace will certainly encourage the market dialogue. But it's up to the investor to pick and choose what opinion they value the most. And by choosing a particular rating agency, they will normally consider a few factors. The first is the track record of the rating agency. And secondly is the overall quality of their credit rating across different sectors and also over a very long period of time. In the past 100 years, we have rated over 1 million debt issuance in over 100 countries. And we have offices in 35 jurisdictions. We have very strong presence in all key markets around the globe. In Asia alone, we have offices in 8 countries, and we established the foothold 40 years ago in this region.
During the global financial turmoil, the world's top 3 rating agencies, Standard & Poor's, Moody's, and Fitch, have been at the epicenter of criticism. The firms, all headquartered in the United States, came under heavy crossfire for issuing inaccurate, as well as excessively high ratings for problematic or junk securities. Critics say they played a starring role in the crisis, which sent world markets into a tailspin, whipped billions off the values of global stocks, and eventually sparked the global recession.
Despite the misratings and the blame, their status and dominance was hardly shaken. S&P, Moody's and Fitch continue to play a key part in how investors allocate billions of dollars and the ability of governments to borrow.
According to the U.S. think tank, the Council on Foreign Relations, the Big Three occupy a collective market share of over 95%, with their rating decisions still exercising a major influence on investors and global markets. Industry insiders are now calling for a speed-up of the long-stalled reform of the global ratings regime, which has been slow to take off since the crisis.
The top three credit rating agencies, Moody's, Fitch and S&P, have been heavily criticized during the 2008 financial crisis. How is Universal Credit Rating Group different?
美国这三家评级机构呢，他们对08年发生的全球信用危机呢是负有重大责任的。我记得在2008年10月份呢，这三家机构的 CEO 呢，在美国国会的举行的听证会上公开承认他们犯了道德错误。那么后来的这个大量的这个研究表明呢，他们除了道德错误以外呢，他们在评级的标准和方法上呢，也犯了非常严重的错误。我举几个例子就可以说明。那么他们的评级的核心思想呢，是违约率，也就是说呢，它是用历史的违约事件进行总结以后，来判断未来可能发生违约的情况，这个是做不到的。也就是说，历史的违约事件和未来要发生的违约没有内在的联系。那么我们可以断定呢，违约率呢是一种验证评级的方法，而不是评级的方法。那么它还有一种理念呢，叫主权上限论，就是它对每个国家的主权的评级，作为这个国家所有债务人的最高上限。这个也是完全错误的。就是一个国家的这个中央政府能否偿还债务，它和这个国家其他的债务人也没有必然的联系。第三个呢，就是他还用了一些更多的就是评级的指标，来进行这个评价。这些指标我们发现呢，完全缺乏内在的联系。所以这个呢，它这么三部分内容构成了它主要的评级思想体系。这个呢，被实践证明是完全错误的。
How could then a new ratings system contribute to financial stability? As you said, the 2008 financial crisis, stock markets plunged, banks collapsed, and the big three ratings agencies have actually been criticized for their misratings and contributing to the financial crisis.
I believe we have to take a certain number of steps. The first one is diversity. We can no longer have only big rating agency coming from the Western world. We need to diversify. We need to represent more the emerging economies. We need credit rating agency coming from Asia, coming from Africa, South America. They need to be part of the new system. And that's where the project of UCRG is quite innovative, because it's a project that looks forward to federate small agencies coming from everywhere in the world, and trying also to advocate for a dual system, dual rating system, not just one rating, which might be not enough to judge the quality of an economy, to judge the quality of a company, but a dual rating, one local rating and one global rating, which is a better way to assess situation. If we look back during the crisis of 2008, we've seen that countries like Pakistan have been very poorly rated. A certain number of companies and banks in Russia have been poorly rated, and they have gone through the financial crisis quite well. If we look at the economy of the world today, we see that there is a strong need for resources, credit resources in Africa, in South America, and there is not a direct connection between the credit rating system and these regions. So we need to reallocate the resources where it's mainly needed. I will take another example. Small companies, small and medium-sized companies, they have a lot of difficulty in getting credit resources. So if we want these companies who are absolutely needed for growth, if we want to fulfill their needs, we need to take into account their specificity. So whether we are talking about companies, whether we are talking about countries, Africa is going to be one of the major sources of growth in the coming years. We need to respond to the need in terms of credit.
And what kind of specific mechanisms should be put in place so that not the same mistakes that will be repeated again?
Well, I think we need more regulation, more banking regulation. We need also a different and more stable currency system. We see that the privilege of the dollar is a privilege of the past. We should not depend as much as we do today on the dollar. Whenever the economy of the U.S. is facing difficulties, well, all these difficulties, they have consequences everywhere. Remember the crisis of the debt selling in the U.S. It had consequences everywhere. So we should try to work out new mechanism, like, for example, a basket of currency to be the currency reserve for the world. And I believe we are going step by step forward in that direction. For example, if you look at the convertibility of the yuan, there are a lot of progresses that have been made. There are new systems in Germany that accept the currency of the yuan. Just during the visit of Prime Minister Lee in London, there have been decisions also taken concerning the pound and the yuan. So I believe we are having progressively new steps. And concerning credit rating agencies, I believe newcomers can really change the spirit of the system, can create more competition. If there is no competition, then there is no stability and no quality of the system. And also more regulation concerning the credit rating system in order to be able to monitor better at a higher level what is going on and really track the problems all along the road.
There's an urgent need to reform the international credit rating system. What are the main features that this new system should have?
I think, first of all, credit ratings have been around for a long time, but they have been the exclusive preserve of a few companies, which are private companies, not owned by any country, all based in the United States. And I think the time has come that we globalize this whole effort. We have to create an environment where nobody has a monopoly. We have to create an environment that there's transparency in the process. Everybody must know how ratings are done and how they should be managed. One of the problems which exposed them during the last financial crisis was that companies with high ratings, they failed. And one of the things we discovered after details were gone into, that the issuer of the paper, the person who's borrowing, pays the rating agency. So by definition, there's a conflict of interest, meaning you are issuing the paper, you want a good rating, and you go to a rating agency and say, please rate me, and you will be getting paid for it. And these rating agency employees were getting bonuses based on how many companies they rate. So that, to many of us, was a conflict. That at one side you are using this to generate income, and how can you be objective? You can be, but there's a risk you may not be.
So how can this conflict of interest be avoided in the future?
This has to be avoided through transparency and through more professionalism. So it cannot be a monopoly. It has to be an open, transparent process. Plus, we don't have to have the issuer paying everything. Maybe the investor should also pay. That will make it much more balanced. We are not just saying that this is a north-south issue, this is a US versus the rest of the world issue. That's not the way to look at it. The way to look at it, what have we learned from our experiences, what mistakes were made in the past financial crisis, where well-rated companies collapsed overnight. Why did this happen? And how can we avoid it in future?
So what kind of specific mechanisms need to be implemented to avoid that such mistakes happen again?
Well, first of all, the process has to be transparent. The rating agency must explain what they are doing, how they have evaluated the company. And before even we go into that, one thing is very certain. You cannot abdicate your risk management process to a rating agency. You use them as a reference point. The person taking the risk has to do their own due diligence. They can look at rating reports. They can look at market reports. They can now, with the web, with the internet, you can go get so much data on any company. And then you can do your own analysis. That has to be the primary driver of this issue. But what was happening before is people didn't know the country or the company. They said, oh, this is AAA or AA, let's do it. And next day, it happened. Some companies went from A to 0 or to default, or from B or triple B to default. It's because the people who were evaluating the risk were doing it in a mechanical way and did not really have a good feel for the company. So risk evaluation is a continuous process. Once you rate, your work doesn't stop. You have to constantly monitor the company. So the procedures have to be changed, number one. Number two, this issue of payment by the issuer is a big conflict in the whole system. And number three, there has to be some regulatory oversight. Who is in charge of these rating agencies? Why are they just 2 or 3 and only in the United States? The investors are all over the world. Issuers are all over the world. So we have to globalize this. It's not anything directed against one market or one country. But it is just to provide a level playing field to everybody, to evaluate risk better and more smartly, and to create an environment where intelligent decisions are made. And in risk, when you take risk, you will have losses. But if you can minimize them, it's better for everybody.
A recent Standard & Poor's report says that the Chinese corporate bond market has overtaken the United States as the world's biggest, and that it is set to soak up a third of global company debt needs over the next 5 years. Although this suggests rising risks for the Chinese bond market, it also offers major opportunities for credit rating agencies, both from home as well as from abroad.
China's leading Dagong global credit rating made headlines in 2011 when it cut the sovereign rating of the United States from A+ to A with negative outlook due to the U.S. debt ceiling impasse and the federal shutdown. But on its home turf, it faces the challenge of curbing the power of the Big Three.
But despite the Dagong-led effort to boost geographic representation and counterbalance the U.S. players, the competition with the Big Three is even felt on its home turf. Among the top 4 Chinese rating agencies, 3 of them are either partially invested by or in a partnership with the Big Three, controlling more than 2/3 of the overall market. What's more, homegrown firms are facing a lack of credibility, fierce competition, and weak profitability. How can these local rating agencies grab a bigger slice of the cake and have a greater say?
How do you see the local credit rating industry in China?
Compared to, obviously, to the U.S. or European market, I mean, the Chinese market is still relatively young. I mean, we've been only started rating bonds probably in the last 25, 30 years. So it hasn't been around that long. But it has grown tremendously over the last 5 to 10 years. It started out with the development of the short-term commercial paper, and then medium-term notes, and then there's a number of new products, and then also recently with the pilots for the structured finance issuance, the market has grown tremendously. I think one of I forgot which research house, but one of the research houses project that the China bond market will probably exceed either the U.S. or the European market individually by the end of next year. So, I mean, I think the growth potential in China is tremendous.
A Standard & Poor's report says that the Chinese corporate bond market has overtaken the United States as the world's biggest and is set to soak up a third of global company debt needs over the next 5 years. As a local credit rating agency, how do you view this potential?
Well, I mean, I think one of the challenges in this market is that there's a lot of regulators that regulates the capital markets. And also, from an investor-based perspective, it's still not as mature like, say, for example, the U.S. or the European market. So in terms of companies that can issue bonds or companies that can borrow from the capital market, is still the top-tier state-owned enterprises and some of the bigger companies in each of the industries in China. So in terms of diversity for the rating base, it's still very limited at this point. So I'm sure you've seen research where the rating, probably the lowest rating is like AA- and up. So I think one of the potential growth for this market is obviously that diversity of issuers and also investors. Because I think once we can get in more institutional investors, more issuers that are maybe lower in the rating scale, then this market can then grow a lot bigger. At the same time, also, the structured finance market is something that's very important, and that's still in its pilot stage at this point. So once we get through this pilot and we can move on to a regular market-driven issuance, then I think that's potentially could be a big growth area also.
The domestic bond market in China and also the cross-border market have grown significantly over the past few years. For the domestic bond market, the average growth rate is about 15% over the past 5 years. And for the cross-border market, the growth rate averaged 39%. It's a very large growth rate. So our focus in China are consistent with the two, the domestic market growth and also with the cross-border market growth.